Sanjay Mathur, who's the head of economics research, now joins us from RBS. Good morning. Good to have you with us on Morning Mantra. To start with, would like to know, how do you see inflationary expectations both at the WPI and retail level shaping up? If the government decides to hike diesel prices and LPG prices, how would the same impact inflation?
I think it would actually be positive in terms of expectations, as long as there is uncertainty over fuel price hikes. As you've also seen in the case of Indonesia, inflation expectations don't subside. The moment you do it, people start to feel, okay, we are over and done with this, and that probably helps in calming down inflation expectations. The second point is we're in a period of very weak demand, and corporates are finding it hard to actually pass on cost increases. So in that sense, inflation expectations should subside.
Now, Sanjay, if the government hikes diesel and LPG prices, it will add to inflation. So do you think this will limit Reserve Bank's ability to cut interest rates going ahead?
No, we don't think so. I think it would enhance their ability. The RBI wants to see a reform of the energy market, of energy prices. It would actually welcome it. And the second point is, as I said, that corporates are having to absorb a lot of these input costs. Therefore, the impact on inflation should be somewhat lower than we would have had the economy been booming.
And what's your view on India GDP growth for FY13 and FY14? How do you see the agriculture as well as industry and services shaping up?
We are looking for 5.3 this year, that's FY13, going up to 6.5. Now, the important thing here is that regardless, both numbers are reflecting sub-potential growth. The weakness has been in manufacturing. Now, in FY14, manufacturing should look a little better. Policy has improved at the margin. It's not adequate to take the economy back to 7.5, or 8, even 8% growth numbers. So we will see a modest improvement.
What about the twin deficits? Do you think the government will have to resort to additional borrowing? If so, what will be the impact?
We think the government will need additional borrowings. Our forecast for the deficit is 5.5, 5.6, in that vicinity. Now, the good news, however, is that an overshoot has been priced in. And secondly, the sort of RBI has been conducting open market operations to support the bond market. So we are not particularly perturbed by this, for now.